Welcome to Total Money Management, going over the week that was ending September 26.
Good afternoon, fellas.
How we doing?
I'm good.
Excellent.
What about you guys?
Footy final time.
On fire.
Who's playing tonight?
Sharks and Storm tonight.
Yeah.
Who cares? Broncos on Sunday.
Yeah,
mate.
I'm looking
Broncos
forward to
versus those evil Panthers.
And they haven't been doing that well, the Panthers, this year.
Yeah, I know, but I'm just nervous. I can't watch it.
They're like the arch nemesis.
You can do it, mate.
No, I don't. I don't watch it.
Because you have it on, but you don't you don't watch it. Or
I just don't watch it because it makes me. I remember watching the 23 grand final, right? And I was walking around the house saying a lot of bad words when we were losing at the end, and it was just scarred me.
So if it's a good game, you'll get a mate right into it and you'll go and start it from the beginning.
Yeah, well, sometimes, yeah, because a mate of mine wrote to me, the Broncos were playing the Raiders, I think it was, or something. Yeah, the Raiders were up 28-12. And close your ears, Leo. This is about the bit. And I said, it's all over. The Broncos won't win this. And then he writes to me 5 minutes later and he goes, I wouldn't say that. And then it's like, oh, no, that means we're close. Right, so then I have to go back on and look. Oh, it's 28-20, there's only 10 minutes left. We probably won't make it, So I turn off and it's insane thing that I think if I prepare myself for a loss, I then try to kid myself that I'm not disappointed.
Mm.
It's a stupid thing.
I didn't take you for an anxious person.
No, but that's his system, mate. He's got a system in place, which is why,
Yeah, I only watch it if we win, then I'll go, right, now I'm going to watch it.
I'll rewatch the game.
Right?
Yeah.
But if we lose, I go, that's it, I'm not going to watch it.
The man with the system for everything.
He's a fair weather fan.
But I think I might have said this on a blog a while ago. Supporting a football team or any sports team is like just really stupid, right? Because you basically lose 9 times out of 10, right? Yeah. You might, you think any of those NRL teams, everyone's disappointed at the end of the year except one team, right? Yeah. And then every year it's usually not your team.
Yeah, especially if you support someone low in the rankings as well. What's the point?
Imagine being the Gold Coast Titans supporter. You look at it and just go, guys, God, pick someone else.
They love being punished.
All right, I'm getting us back on track. This is getting well out of hand. I'm going to go to sleep.
Headmaster's in.
What are we covering? China trade surplus surges, Trump's visa crackdown and more tariffs.
You just skip the first bit.
The AI roadshow rolls on.
Skip the pictures.
Mate, there's a few pictures. Look, there's been a few articles come out this week, which is true. Like young adults are taking on more and more risk. Because the dream feels unattainable. So it's like, I'm going to have to do something big here.
This financial nihilism is so true, and I've noticed it over the last year or two, particularly with crypto, where people are just like, nothing matters anyway. We're just going to pile in on crypto.
But I think we talked about this last week, or Tom, you and I did, where I said, I think it was last week. As I said, it just feels like everybody's just lying and speculating like crazy to try and get rich really quickly. And you can understand, I mean, especially you guys, even my son, who's 18, he's only been working for 6 months, but he's already like, I'll never get a house and blah, 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 blah. And it's a bit like, geez, mate, you haven't been that long at it. But it's a general wave of, there's a lot of social media and all that stuff now basically saying, you guys have been done over by your parents, right? The boomers or your grandparents, and you're never going to get ahead. And I don't think that's correct. But it's been a long time. It's been a long time between drinks, and it's really hard for young people to look at it and go, yeah, sure, Steve. They're all sitting there on properties worth $2 million, and I'm getting $20 an hour being an Uber driver.
Yeah. Well, yeah, people now, what they're paying rent today, 15 years ago would have got them acreage, big house and acreage.
Yeah, absolutely.
So it's just like, if I was in this situation 15 years ago, house would be attainable. Well, I saved 250 grand for a deposit.
Yeah.
I was talking to someone today, this morning, and said, they were saying about their property and said, we got a really good bargain, and we bought it, late 2010s, and basically, if you have a look, and this is a generalisation, but if you'd have bought a half-decent property in the last 20 years, you've absolutely killed it. Not necessarily apartments, but houses. If you'd have bought a house in 2005, 6...
Even the last 5 years.
Yeah. But that's not a long enough time, Jacob. You know what I mean? Like, yeah, you've done really well, but in 15 years, it may have fallen back to where you bought it from and you actually haven't made anything.
Yeah.
But if you bought it... and this is why a lot of the boomers have got lots of money, right? Because we bought in the 90s and the 80s and the 2000s, and the prices have just skyrocketed.
Back when it was $50 for a house.
Yeah, easy peasy, hey.
Yeah. But it's true, and I can see why young people are going, I'm just, my son every Thursday goes to the pub and bloody gambles, right? Just puts money in, feeds the machine.
Yeah, because he's 18.
Yeah, I know, Tom, but I shouldn't say I never did that because I did, but it just seems a lot more intense now. I don't know what it is, but it seems a lot more widespread, right? Like Australians are gambling their heads off.
It's one of the only countries in the world where it's just so legalized and you can do it wherever. It's advertised everywhere. Like you look at not to take it back to NRL, but you look at the Broncos and it's like the Star Casino. It's just advertised. You go to the UK, it's none of that. You go to America, there's none of that.
Yep.
And everything, the advertising rights here are insane. We see it all the time at the company that I work for as well.
Yeah, it just seems to me like we're just in this huge casino.
Yeah.
Where, and that's what I say, I think I know it's changing because one of the things we talked about, in the new normal was the transition away from that intangible stuff, like Bitcoin.
Yeah.
Right. You just buy it, and then what do? Nothing. You just sit there and wait for it, and it's like, well, okay, but don't you put in any work? It's like, nah. It just, it just goes from a digit this to a digit that.
Yeah, it's magic internet money.
Sorry?
It's magic internet money.
Well, yeah, but it's a sign, Tom, of in the old days, it was like I'm going to build a company and I'm going to build houses, right? Or I'm going to do something that was physical, right? I'm going to build widgets or phones or something, right? Whereas now it's much more like I'm going to work out how to, do Bitcoin or stocks or, do you know what I mean? Like there's no more.
Well, it's the financial independence retire early movement.
Yeah, partly
something for nothing.
Yeah, partly, Jacob. Yeah, because a lot of those people generally aren't that rich to start with.
No,
right?
Like I honestly think FIRE is bullshit. Like I think financial independence retire early is nonsense, and the people that are retiring early have worked so hard to do that.
Bread and water.
Yeah, and then they're preaching that this is what everyone should do to earn a buck.
Yeah, so. I think it's not as easy as they make out, right?
Yeah.
Oh well, a lot of them, like you go on Reddit, a lot of them earn good wages and they're making smart investments. But like my question is, then what? Like what?
Well, yeah.
Okay, you get yourself in a position where at 40 you don't have to work. Amazing.
Yeah.
But like use it or lose it.
Yeah.
Like, you know.
Some can, but I noticed a few of them have got into now I've got a family and children, and it,
I need to get out of the house.
Well, no, but it's just there's a bit of that.
I think I need a job again.
Yeah. Like, oh, honey, I'll have to go back out. You look after the kids, but I think it's just it just seems to have, to me, that like I said before, the FIRE stuff only comes out when there's like raging bull markets, and it feels like everybody's speculating. And like I said, I think it was last week or with you, Tom, that there's so much fraud going on, right? And like I said, in the American property market and stuff, and crypto scams and stock scams,
one of the banks as well, I think this week didn't they have to pay a big fine?
NAB, right? Yeah. Staff taking bribes to approve property loans.
Wow.
Right. And this one here, day trading's about to get easier for small retail investors, right? What they're doing is you used to have to keep 25 grand in your account, right? If you were using margin and stuff. Well, now they've gone, no, things have changed. We'll give that the flick. And I think they're now taking it down to 2,000.
Right, okay.
Or it's a percentage of portfolios or something.
Yeah, but we'll let you go negative 25.
It's just going to liquidate.
You see, this is the stuff you see when you're at the casino. What they're doing is saying we need to keep pumping more money into this stuff.
Yeah.
Right? And that's why that's what concerns me, because you look at it and go, as we were saying last week, gold all-time highs, Bitcoin, stocks, bonds, property, playing cards, everything's just gone completely off.
Well, pressure's building, so opportunities just around the corner.
Well, yeah.
For value investors.
Yeah, probably opportunity to short, I think.
Yeah. Well, Bitcoin's had a shocker of a week this week.
What is it, 113 or something?
It's come down. It was 109 not last time I checked. Maybe this morning.
109?
Yeah.
Okay.
It's come down a bit.
Righto.
Still doing incredibly
Still
well.
Very high.
Yeah. China's trade surplus is surging. What's going on? China hasn't been a topic of conversation really for us the last few weeks.
Yeah. The big picture is what's happened is China exports a lot to the US, right? And then the US says, listen, we don't want that stuff anymore. So China's got capacity for I think with solar panels, China can build all the world's solar panels, right? What the world needs, right? So cars, same sort of thing, right? China could do, all the steel, all the cement because they've got all that capacity, right?
Yeah.
So now that the Americans have said, no, we don't want yours, and by the way, if they try to send it through your country, we're gonna tariff you as well, right? So what's China's now said, okay, now we have to go and hit Europe. Now we have to go and hit the rest of Asia and try and export everything there. Well, the Europeans have been doing the same thing. So like I said, everyone's been riding off the American coattails. Now when America says stop, everyone goes, uh-oh, we've got a real problem here, because everybody's now trying to export to everybody else. And, of course, everyone else is going, no, we've got a car industry. We don't want your cars. No, we've got a cement industry. We don't want your cement. So it's now becoming more dog eat dog because the Americans have said, no, we're going to be doing our own stuff, right? That's what Trump is doing with the tariffs. So I think today he put more tariffs on, or potential tariffs on, he did. He put 100% tariff on imported pharmaceuticals. But if you're building a pharmaceutical manufacturing facility in the US, you don't get tariffs. So again, Biden was saying, we'll support you if you do this. Trump is saying, we're going to punish you if you don't do this, right? So it's they're both trying to get the same outcome. They're just using different methods.
Yeah. Carrot and stick
stuff, right? So
Trump's got a carrot and a stick.
Well, yeah, he's a carrot head.
Trump is a carrot, yeah.
And also that he's also this week put 100,000 on the HB1 visas. What the American companies were doing was saying, there's no one here in America who can do it. I'll get this special visa in. And generally, the Silicon Valley's shocking for it, right? And so they're hiring Chinese and Indians and not paying them as much. And, of course, what that does is it drives down the wages, right? So they're exploiting the foreigners and it's impacting on America's wages.
Yeah, so he's brought this visa in for the companies to pay for high-quality candidates from overseas.
Yeah, well, what he's saying, what they're doing is saying, look, if there's a genuine need, sure, you'll pay 100,000 and that person will be, it's like Australia's, if you look at Australia's skills shortage list.
Yeah.
Right? It's a joke.
Yeah.
It's a joke. Like they're saying we're short of hairdressers or, this sort of stuff where you go, oh, come on, this is bullshit. We're not short of that. But what they're doing is they're allowing to bring in cheap labour. That's what's going on. And they're all doing it. The US, England, Canada, everywhere's doing it, right? Because once you get we've got that lowest common denominator thing going on. Once somebody takes the low road in a global system, everybody's got to take the low road to stay relevant.
You need to match it, otherwise you go out of business.
Yeah. We're not going to come to Australia. We'll go and learn in America because they'll let us work, right?
Well, it looks like America now taking the high road, though.
Absolutely. And that's what Trump's doing. So that's where it's, all of this stuff is going to impact company share prices because it's going to basically erode profits because corporate profits have been at a record for about 25 years, right? The long-term average is about 6%. And corporate profits are now up at about 12.5 or 13%. So to bring that back down, what you've got to do is say, well, we're going to bring profits down, and the only way to do that is by raising the wages.
Yeah.
Right.
Well, it doesn't help when you've got people like. So I read something the other day. It's like the death cycle where OpenAI are selling their whatever they sell to NVIDIA.
Oh yeah.
NVIDIA are then selling whatever they're putting a $100 billion investment into Oracle for the cloud systems, and Oracle are paying OpenAI for something else, and it just keeps going around and around.
You know what they're doing? What they're doing is NVIDIA is, if I'm correct, NVIDIA says we'll invest $100 million in, I think it was Oracle.
Yeah.
And then Oracle said, righto, well, we'll buy $100 million. Oh, NVIDIA said we'll invest in OpenAI. And then Oracle says, well, we'll buy $100 billion worth of chips.
Yeah.
Look, to be quite honest, when you look at it, it's NVIDIA paying someone $100 billion to buy NVIDIA chips.
Yeah, just
so you look at that and go, hang on, aren't you buying your own chips?
But then all the stock prices go through the roof.
Yeah, that's exactly.
They're making sales and keeping revenue up.
On paper, though, that's the thing, right? It's not new money going into it. It's the same money going in circles.
Well, yeah. See, the problem, the more you look, and it moves on to the picture about AI boom or bubble, right? Bain forecasts huge 800 billion, that's a lot, gap between AI. And what we're seeing now is the hype has hit, but now we're getting to the reality of it, which is saying, okay, has anyone thought about these data centers? And it's like, oh, yeah, don't worry, it'll be all right. We're going to build them and they're huge. Then when you go, okay, well, have we got enough electricity to supply these things? Oh, don't worry about that. We're going to do blah, blah, blah. So, okay. Have we got enough water to cool these things? Yeah, well, kind of. And what's happening is we've got two things going on. We've got AI disappointing, not living up to the hype of what it said it would do. You've got companies going, we hear all this stuff about AI, but I don't know how it's working. And then you've got the infrastructure people saying, you're going to need a 9 gigawatt data center. There's no water, or basically what they're doing is saying, well, we're going to suck up every, drop of water for the data center, and the community around it, gets no water. Like the Americans are paying really high electricity prices in some areas because the data centers are going to be using all the electricity.
Yeah.
Right. So you start to look at that and go, okay,
there's some cracks.
It's starting to come off the boil a bit, and that's the problem is it will probably work out in some way, but it doesn't justify a PE of 350.
No.
Right?
Well, in the article that you posted,
yep.
Effectively Bain & Co. Have gone in, done their analysis and gone, hang on a second, AI companies are going to need $2 trillion in combined annual revenue to fund the necessary computing power to meet the projected demand for the AI services. And they're sitting there going, well, from what I can tell, like if it continues at this rate, we're likely to fall 800 billion short.
Yes.
So, the investment into the infrastructure versus what those companies are going to bring in.
Yeah. See, the problem is, Tom, the way I've looked at it and I've read a lot about it. It basically looks like there's not enough revenue to make them profitable, right? And so if you have a look at the CapEx, right, capital expenditure, it's like I think Microsoft and OpenAI and those places are spending like 60 to 70% of revenue on CapEx. Like, that's just nuts.
Well,
that's nuts.
Who was it? Zuckerberg came out last week and said spending $200 billion in this area, even for it to fail, is worth it.
Yeah, which is, let's be honest, that's dumb shit.
Yeah. It's just money for like they've just got all this cash. It's investor money anyway.
Yeah. Well, I think Sergey Brin came out and said, what was it? Some stupid statement. I'm prepared to go bankrupt to win or something. And it's like, okay, well, that sounds a bit stupid.
Until you actually go bankrupt.
Well, yeah, but it's just, you know what I mean? Like you get statements made in the heat of the moment where unless you're unless you're looking at it with a skeptical eye, you sort of go, yeah, great. Hey, we're going to have data centers and it's going to be really fantastic. Then when you go and speak to the engineers, that's when you go, okay, hang on a second. Have you guys actually thought about it? But Sam Altman is out there, pushing this stuff of generative AI and it's going to be like a human. I can tell you, it's not going to be anywhere near like a human. And that's the problem because the stock prices are reflecting absolutely everything they've said is going to come true.
Yeah, well, it's based on a story.
Yeah.
I'd actually be keen, if there's anyone listening that is a genuine AI engineer or an expert, write in and give us your thoughts. I'd be open to another opinion.
We're purely looking at this through a lens of going, not saying it's garbage, but just saying these companies are crazy overvalued.
Yes.
People are piling into these things. I wouldn't touch it with a 10-foot pole at these valuations.
Yeah. We'll probably have some form of AI. It will probably be a lot less than what people think. Right, because again, there's a study that came out this week, I think it was today, from Microsoft, which said actually in medical, looking at medical stuff, right? Like here's all these things. What is it? And AI goes, the person's got stomach cancer or colon or something wrong, right? Mm. What they did was they went through it. Now I haven't read the whole paper, but the abstract was saying. Actually, what the AI is doing is guessing. Mm. So, in other words, there's not reasoning. It's just going,
think it's this.
It could be this. I'll have a shot at it, So, in other words, a human would say, listen, mate, I don't know. I need some more tests and we need to, have a look at this stuff. AI says it guesses, right? So, there's just these things that more and more are becoming problems to show that it's not as good as you think it's going to be.
From a like a stock market perspective, or just a general investment perspective, it reminds me of like a mixture of GFC and .com bubble, where we've got companies paying other companies to float stock prices, and invest in each other, and at some point that music stops.
Yeah.
And the version of it now is AI, and it's instead of it being the internet or housing, where banks are paying each other and creating fraudulent loans.
Yeah.
It's now we're here with AI, and history shows that it doesn't work long term.
Well, the problem is, right, we're here with AI, we're here with gold, we're here with bonds, we're here with crypto.
Yeah.
We're here with property.
What do we think about gold, actually?
Goodness me.
What do we think?
Gold?
Over the next 5 or 10 years.
We were saying, I think, last week, the problem with gold is because it doesn't have an earning stream, you can't say, it's at a PE of 10 or it's at a PE 100. Why? Because it doesn't earn anything.
Yeah.
So there's no, you always relate price to value, right? Mm. The price is $1 and the company's valued, the company earns X. Okay, price into earnings, PE ratio, right? Oh, it's, 140. Oh, man, that's a lot. Right, so when you look at gold and Bitcoin, they don't have an earning stream, so it's impossible to price them.
Well, it's a supply and demand argument with gold, but then I don't actually have any experience or know what the supply levels are like.
Yeah, no, not really. It's the argument is, and I think we talked about it a couple of weeks ago, was central banks are buying a lot of gold.
Yeah,
I think there's two things going on. One is I think they're trying to avoid the US dollar. The second thing is, and this is probably, it's hard to say, but what happened was when the German Chancellor came out today and said, we should confiscate Russia's money, right, 160 billion, and use it to give to Ukraine to rebuild, right? See, you got to, it's a bit complicated, but in the US, when you at the Fed, right, the German government or German companies will have US dollars in an account, right? And that's like they draw on it and put it in.
They'll have bonds, right?
Yeah, sort of. And then, so Russian companies have all this money in US dollars sitting in the US Federal Reserve.
Which they're all cut off from, right?
Which they were cut off from, right? So what Germany is saying is, well, listen, we should nab that. Right now, what what is happening now is central banks from, other countries may well be saying, well, Jesus, what if they do that to us?
Yeah.
The
recipe for what
we got 50 billion sitting in the Fed. What if Donald Trump gets the shits and takes the 50 billion? So the idea is buying gold. And this week, China came out and said, you can store the gold here. Right? Which I wouldn't be too trustworthy of Chinese, quite frankly. But
we'll keep an eye on it for you.
Yeah. Listen,
I will keep an. If anyone wants to store gold with me,
listen, I'll just keep it in the bedroom. Let me get back to you on that proposal, okay? But that's the idea. But the other thing I think, like I said last week, is everything's going up, right? And it's like everything's correlated. The old saying is when shit hits the fan, everything correlates to one. Right? In other words, everything falls. Gold, stocks, Bitcoin, property, right? It all goes to hell. This is the opposite, right? Everything's correlated to one on the upside.
It's a melt up of all melt ups.
Yeah.
And it's awesome until it isn't.
100%. That's, and that's what so concerns me, Tom, because if gold was cheap or bonds or something, I'd be going, oh, well, okay, that's a, quote, normal market, right? But at the moment, everything's expensive. And I remember even...
energy.
Yes, but, all the stocks... But see, that's a classic, Woodside paid a dividend on Thursday, right? I went back and looked at mine, right? Now, I'm getting 10% as a dividend, okay?
It's not bloody bad.
No one's interested.
No.
Right? No one's interested. They all want to buy Drone Shield, which is, a drone maker. It's gone up, 45% in 2 weeks. And that's
hasn't your Woodside also doubled or something?
No. Woodside's still very cheap. But my point being, what's happening is when you go to people and say 10% yield, at this price, and it'll probably improve, people are going, yeah, nah, mate, I'm going to buy Biddy for 113, and that's what's going on. And so that's a symbol of, the sort of irrational exuberance.
Yeah.
Right? Doesn't seem to me that everybody's thinking. It seems to me that everybody's just gone crazy and is just buying whatever they can get their hands on. Right? And it's happening in property. Right? People are saying, I can borrow 800. Right? Where can I buy for 800? Darwin. Right, get me a property in Darwin, right? They're not thinking, oh, is that the right thing to do? Thinking through the consequences. What do? They go up and bloody will talk to buyers agents in Darwin who say, I can get you a property. It's all great. It's fantastic, and next minute, there you are. You're a property owner in Darwin.
Well, the whole thing is, right, if you can't afford to buy where you want to live, rent vest. It's the
thing. Little bit,
It's like go buy a property wherever you can get a property. Just get one.
Yeah.
And then rent where you need to live.
Yeah.
And then build it up. And then when you have more equity, which you will, this is the wording.
Yeah.
Buy another one.
Yep.
And then buy another one.
Yeah,
and then sell them and then get the house you
need.
Well,
that's what they're doing in the US.
Well, they're doing it everywhere.
Yes, you're right. But they're doing it in the US and Canada, and now the prices are coming off. So there's people going, uh-oh.
I'm stuck.
Well, yeah, because you see, the idea was, as Tom said, you get equity, you borrow against that equity. But if that equity evaporates, right? So I think I put in there this week about, our wealth has gone up, right? Household wealth is up 2.7 in the June quarter.
Yeah.
It's all because of real estate. And what I'm saying...
Who's checking quarterly?
What I'm saying is, if
the
value of your property goes up, that doesn't mean you're richer.
No.
Right? You still got to live somewhere.
People are just adding risk on risk on risk, and they have been for 25 years.
Yeah. And it's worked.
Oh, absolutely. But to what we keep saying, it works until it doesn't. And
that's right.
You can only, if you keep betting red at the casino and it keeps landing on red 25 times, you're probably going to think it might be black next.
Yeah.
So we're up 2.7 in June, and then we're having the biggest gold rush with AI. So AI and gold are now becoming pals.
Yeah. Everything, as I say, everything's completely nuts. Yeah. Right? And that's why I'm really concerned. In all honesty, I'm so concerned because I just look at it and go, I don't know how the hell we get out of this with a bloke like Donald Trump in the US, right? And it look, as I said to you, the last time Cape was 40, and because I went and checked this before we came here, the Cape was 40, I think, in January 1999.
Well, it's part of it. Let's save it for the lesson of the week. So I want to spend a bit of time on that.
Yep.
So we're talking about bubbles which go on for longer than expected. And when you consider where the Cape's currently at, the current state of the United States, and AI kind of creeping along in the background, you've got three major red flags there.
Yeah. It's just, what I'm trying to point out here, and this graph is, this chart is really good, because all I'm saying to people is you've got to look at the valuation, right? And that chart is saying every time the Cape has been at, high levels, i.e. 25 or higher, you have lost money over the next decade, right? So that's why I'm concerned, because I'm saying the Cape is the second highest it's ever been. Please don't think you're going to get a positive return in the United States over the next decade. You will probably lose a ton of money, right? And in 2000 to 2010, you lost about 4 or 5% per year.
Mm. And knowing that, because you'll get people go, well, I'm in it for longer than 10 years. But knowing that information, you may as well just go, well, I'll sit on it.
Just wait.
But the problem is, like, people have done well, right? It's just a shame that a lot of people will give a lot of those profits back to the market.
Yes, they will, Tom. That's how the market works.
By not having enough cash.
Yes. But the thing that concerns me, Tom, is that there's everything's crazy, right? So you could say, oh, well, stock market crashed. It's okay. People have still got their house and a job. And it's like, actually, no, they haven't got that because property's crashed as well. So this is what happened in the GFC. Property tanked and the stock market tanked, right? And it just wiped heaps of people out. Here we are 16 years later, and this is why I keep saying nothing's changed. Nothing's changed. Everybody's back in the tent speculating again, right? And you're going to get the same result. I don't know when you're going to get it, but you're going to get the same result. But I'm happy to look like a fool for 12 months or 2 years because people will be going, oh, yeah, it's bullshit, But they're looking in the rearview mirror, right? Oh, man, I've been killing it since COVID. And it's like, yeah, I know, dude, but that's not the next 5 years. That's the last 5 years.
Yeah, and you're still making good returns.
Yes. So it's just...
I'm looking at this chart going, okay, 1921 was pretty good. Cape of 5. I'd love to see a Cape of 5.
Well, but you see...
We probably won't.
The Cape of 5 and in 1920 goes up to, about 27 in 1929. So in a decade, you make a bucket load.
Yeah, but back then there was probably 9 people in the stock market.
And then you lose it all, right?
It was just all the...
Right? So
the country leaders.
That's why I'm saying every time you hit these levels... it ends in disaster for the next decade. No one can say to me, here's why it's different.
Not for me.
Right? Because nobody's got all the money's invested, right? It's in property, it's in stocks, it's in Bitcoin, it's in gold, right? So it's all out there. It's not as if we're sitting here going, oh, man, we've all got this cash and it's all loaded up and, I can't wait to invest in something. It's all being invested.
Yeah.
Right? So
do you think we'll ever see single-digit Capes again?
Probably.
You think?
Yeah. I think, look, the hard part, as I said before, is does it crash like, the NASDAQ lost 82% in the dot-com bubble.
Yeah.
You imagine if I said to you, guys, I've got the inside running, it's going to lose 84, 85%. Most people would go, nah, mate, that's not going to happen. But it did.
I would love to buy it 82% down.
Well, yeah. Well, Meb Faber has a thing that says if you buy industries and countries that have fallen 80%, the returns over the next 1, 3, 5 years are unbelievable.
It's astronomical.
Right? Because you're buying at the low.
Yeah. And they're not going to go to zero.
Well, generally.
Very unlikely.
Yeah, generally, Jacob, yeah. I mean, look at the energy ETF. Well, that's why I like sector ETFs so much because the players will change, but the whole sector's, oil's not going away.
No.
And just as a reminder, there was a chart I looked at yesterday that said, when you look at the world's energy, right, use, how much do you think is renewable energy?
Oh, I've got no idea.
Genuine renewables.
I'm guessing.
Give it a shot.
I'm going to look, at the risk of looking like a fool, 7%.
I would say 3.
Okay, so it's about 6. Right,
Good job.
and if you add,
I just crunched the numbers real quick.
he saw the chart.
Yeah.
No, I didn't.
But my point being,
7's always my
coal, natural gas, and oil are still an enormous amount, right? So the idea of, we're all going to be transitioning to renewables is like, yeah, in your dreams, buddy. We won't be there by the year 3000.
Yeah, just go nuclear.
Well, that's the thing, Tom. You see, nuclear's having a little bit of a moment, and the reason why is because everyone's gone, actually, the quickest way to get there is nuclear.
But it takes so long to build a plant.
They need Vernon in a room. He'll talk to him for 10 hours about it.
Yes and no, Jacob. I think a lot of that is regulatory stuff, right? And
Well, that's what I'm talking about. It takes so long to cut the red tape.
Yeah. And that's what I mean. It's, look, this is why I'm suspicious of EVs. I don't think they're going to last, right? I really don't. And again, it's one of those things where you go, oh, that's stupid. That's the future. But the thing seems to be moving towards hybrids, right? And Toyota, who's really, they know a bit, they've never moved to EVs fully. They've always been much more convinced that it's hybrids.
They do a good hybrid.
Right? See, it's the Chinese that are all in on EVs, right? So that's where...
It's trending.
Well, yeah, but that's going to stop, right? Because the US has said, we don't want your EVs. And it's only a matter of time before Europe say to China, listen, you can't keep flooding our market and wiping out our companies. And in China, the foreign companies, VW, Tesla and all them, they're all losing market share. So they're losing market share in China and they're losing market share at home to Chinese. Well, as I said, that ain't going to last, right? They're going to say to the Chinese, listen, dude, you got to stop this, right? Because they're just going to wipe out all these industries like they did to the US.
Yeah. Well, from globalization to deglobalization, we've talked a bit about that.
Yeah.
Before we close up, Tom, you've got a new segment that you're
bringing in. We're going to bring a segment. It's going to be a stock review. So,
a stock review.
What we need from you, write to us on the pod. Tell us what company you want us to have a look at, and each week we'll review a company.
Yeah, don't do bloody AI.
Do whatever you want.
Do a video to annoy Steve.
Don't try and be a smart
Don't do Bitcoin.
We might do a poll, on the socials, write to us on Spotify or Instagram, and the people with the most amount of that stock will review.
Yeah. And just spend the next week looking at the lesson of the week chart, like I wrote there. Just keep looking at it. Whenever you get the urge to go, I think I'm going to write a great bargain, just keep looking at that chart going,
Good point. Those who listen to the podcast that aren't subscribed to The Week That Was, please jump on the website. It's free. You'll get access to all the articles and charts that we've spoken to today. And also, please check the blog out. It's updated weekly. It's awesome. And not many people look at it.
And we're going to pizza.
We're going to go get a pizza. All right.
See you guys.
Cheers, folks.
This podcast does not provide financial advice.